Don't read any additional arrogance into that. Just genuine circumstances are requiring me to have to record this video a few minutes early. However, we're seeing things that are playing out relative to our last video. In our last video, we discussed reasons why we were concerned about Apple in particular, and Apple being 7% of the S&P 500 made us have to be worried about the S&P 500. Additionally, we've had concerns about rates being below 3%, how that shouldn't be the case, and how a move in rates above 3% might add some additional downside to the market. Needless to say, we saw both bad Apple news today and rates poke above 3%, and guess what? The market went from up 1% to down 1% in the same day. That's quite a big move. That's a 2% intraday move. This is not, oh, the Fed dropped some news. This is just a 2% basically normal trading day session intraday move. Those are relatively rare as far as I'm aware. However, I think we've still got additional downside to come. Apple's had quite a run the past month or so. Quite a run. And I think there's a good chance they're going to miss the earnings report. And I think the notion that they're pulling back on hiring, investing less in their business is important. We know foreign exchange is going to be an impact. We've seen, as we discussed in the last video, that pre-owned sales or prices rather are coming down. There's just a number of reasons to be concerned about Apple. 2019 sales slowing, pandemic kind of hid that for a little bit and boosted things. Now we're normalizing, and Apple's going to be a victim of normalization. We thought it was just going to be Zoom. We thought it was just going to be Peloton, but no, it looks like it's going to be Apple too. So we'll see what happens, but that earnings report isn't for another week. So we've still got time until that happens. And we're already seeing some jitters in the market. The 10-year can poke back above 3%. I believe it has come back down, but can definitely get back above 3% and then start chugging along. And there's a lot of earnings coming out. And I don't think Apple's the only one. I just think, people had flocked to Apple the last month because, rates came down. People looked for something to buy, and they bought a lot of Apple because it was safe. And now it's not going to be safe. And when Apple's not safe, I think that's going to have a little bit of a cascade type effect. And it's something we have to be concerned about. So I am very hedged up, the most hedged up I've ever been in my life. I was bullish the past several weeks and month or so, maybe 2 months. And I've taken my gains. I definitely made some gains there, particularly in the more high speculative stocks. But I have had to cut a lot of positions and take huge chunks of positions off. I've taken huge chunks of my CRISPR stocks off. You know how much I like those. I still have some. I'm not saying I'm guaranteed to be right here. I do have to hedge against the upside. And I do like those stocks long term. And I am willing to experience a little bit of pain to see tremendous gain that I foresee. But I have taken, each one of my 3 CRISPR stocks down 50% or more, and I had options that are all gone. So the highest risk, the time stuff is gone. The stock is mostly sold. Still some. It's not a small amount, but it's way smaller than it typically is. And my hedges are way bigger than they typically are. These hedges are like oil bets, basically, at this point. So we'll see what happens. I think today we're kind of seeing some things that we had foreseen come to fruition. Friday, we chose not to make a video for circumstances. Could have gotten around those circumstances, made a video. Didn't like what I saw on Friday's video, or Friday's trading action. Decided to take the day off, basically. Now here we are. We were patient. We didn't do anything. We didn't change our thesis because of one day's action. And we'll see what happens. So that's today's video. And until next time, peace out.